Hello everyone, welcome to your Wise Wednesdays with a super quick tip today. Hey guys, look, I just wanted to quickly cover off the difference between capital growth and growth corridor. I see a lot of investors in the various marketplaces we are very active in continue to get these two things confused, right? They're two separate things, and it's important that you separate these when you make an investment decision in a particular area. So capital growth essentially is what the price accumulation of a particular house or asset over a long period of time, right? So that's capital growth. And when we talk about capital growth locations, these are locations where it's anticipated that supply will be lower than demand, and in turn it'll create house price pressure, and then you'll get price accumulation, which results in capital growth. On the other hand, you have growth areas or growth corridors, and a lot of investors are confusing growth areas with capital growth. In fact, a growth area, all it is essentially is what councils would describe as an area where the urban footprint or the urban sprawl is expanding. So almost every town or community, city, for example, will have a part of town where they need to cater for future demand / future population growth. So you always have an area where there is new house and land packages or new supply. So that is more or less a growth corridor. That's what they refer to as a growth corridor, because that's where the population will expect to expand. However, from an investment point of view, these areas historically don't perform as well as established areas, and it's largely because of the new supply issue. So when you are on the fringes of a town, the fringes of a city, you get a lot of that new supply, and you have to remember that supply is the enemy of capital growth. So it can certainly restrict your property from performing from a capital growth point of view, definitely. So don't confuse the two when you are looking to invest in property. And yeah, we see this time and time again, where we'll speak to a particular investor and they say, I want to invest in this area because I hear that it's a massive growth area, infrastructure, new development, etc. However, that is not a precursor to capital growth. In fact, it actually has the opposite effect. It actually will restrict your ability to get capital growth. So we tend to stick to more established areas. So don't confuse the two, guys. Don't confuse capital growth location with growth area. And good luck with your